All right, guys, welcome to today's live stream. Today we're live streaming my journey trading my liquidity map system. And I've entered into a sell trade, and we're waiting to see if this one goes in my favor. I took this one when it broke this trend line. This trend line here. So I took that sell, and I just adjusted the trend line a little bit just to kind of refine that move a little bit, just to give it a little bit of room. So if it continues coming down, I know, okay, it has broken that trend line, and we could see price continue moving down. All right, so I'm going to try to prepare in the event that price wants to go back to the upside using trend. All right, and that should be good there. If price breaks out, it could be moving up some more. Okay. So right now, price is this purple box that you're seeing here. I drew this box here based off of Fibonacci. So it's like between 50% and 618 of the 1 hour bar. So this 1 hour bar that you're looking at over here, this is 50% 618 of that bar. So if we're looking at fibs for the retracement, then this is a very good area for price to turn to the downside. So since I saw the break happening at that area, it told me that price is possibly looking to start reversing at that area, or price is going to go into correction for more upside at that area. So this move could go back to the downside, or this could be the start of a move up. So we'll see which one it ends up being. Okay. Either way, we're ready for whatever comes our way. Our stop will remain where it is. We won't move it until we see price break down. If price breaks down, continues moving down, then it comes back, gives a correction, then breaks down from that correction, then we can try to move our stops into break even. We don't want price just pulling back, stopping us out, give us a bad entry. Right now our entry is good if price is going to move down. Our entry is good, our stop is good. So we're just going to wait, just have patience and see what the price wants to do. Allow the market makers to make their move. Okay? What we're getting here is a corrective move for downside. So if this is going to be that corrective move that we're looking at, it may not be a deep correction. It may be an average size correction, just a regular correction, which is 50%, 618, and then it starts moving down. If not, it's going to become a deeper correction for more upside, and price could start pushing aggressively to the upside. Like you can see right now, it's breaking out of that downward type correction. It does not mean that the correction price is going to go up. It's possible price will go up because it broke that correction, but then price can also be creating a different type of formation to continue its move to the downside. So for that reason, we would not have moved our stop. We'll leave our stop where it is. It's close to our stop now, so it's looking like the likelihood of price moving up becomes a bit higher, but price needs to take out that high first. If that high is not taken out, that means that price can still go back to the downside. Okay, so we're not going to panic. We're not going to try to force things. We're just going to allow the trades to play out. When the time comes to move into break even, we'll move into break even. Okay, right now it's just not the time to move to break even just yet. So let's see if this is the one that pushes price back to the downside and we go to this D zone. So this D zone, at this D zone, we're going to look for about a $163 on that one. Let's see how it goes. So right now price is still looking sideways. So the possibility of price moving up, it's still high. All right, price is looking like it wants to push up, but we'll see what it wants to do. The market makers could just be playing around with us. We did create a correction. It was a bit on the aggressive side. I mean, if you look at it from a higher time frame perspective, I mean, this is a bit of an aggressive move to the upside, right? So possibility of sideways and then continuing up is high. That can happen, especially seeing the price is moving sideways on the 1 minute candlestick chart, right? On the 15-minute time frame, it's even more aggressive. 30-minute, it's more aggressive. 1 hour, it's more aggressive, right? So this price needs to fade to the downside. So on the 1 hour, it's just going to become a big wick, right? On the 4 hour, it's already a wick to the upside, so price could still push back down. 1 hour, we're looking to fade that price back to the downside, and so on. So we're just watching to see if this one's going to push back to the downside or if it's going to continue moving up. All right. This purple box that you're looking at is the 50% to 618% of the 1 hour bar to the downside. So this 1 hour bar over here, this line that you're looking at here is 618. So on this minute chart, this is 50% and 618. I created this zone, right? So let's see if this is going to keep the price composed to the downside. We have our A zone above, so price could want to come to this A zone. If it comes to this A zone, then that's going to mean that the possibility of price going down even further becomes higher, right? So we're just going to watch and see what happens. If this zone is respected, price pushes back down. Okay, it looks like it wants to break to the upside. Pushed up aggressively, but it pulled back. Let's see what's going to happen. We're just going to let the price play out however it wants to play out. We took our first attempt to catch the move down. It's moving sideways. It's pretty flat, which is not necessarily a good sign for a move down, but the market makers could manipulate the price in so many different ways. We know that we took a good entry. We took it on the break of that trend line. So we know one wave is done. If that was the only wave, then price has to go down. If it's going to give us more than one wave, then it's going to go sideways and it's going to go up. It's going sideways right now. So the up possibility becomes higher since it's so flat. Price is so flat right now. So we need to see price break down, and it can do that. So we're not just going to say, okay, the price is flat, and because the price is flat, we're going to just, look to go long. The market makers, they can manipulate that. So we'd rather get stopped out and then look for another setup. If we get stopped out on this short, price is most likely going to get to this A zone, right? Or maybe it barely taps us out and comes right back down just to kind of grab liquidity before it comes down. That's a possibility as well. Okay, the market makers like to grab liquidity before they move. So they could just simply grab liquidity here, drop. So even if we get stopped out, we're still bearish. My entries are on the 1 minute candlestick chart. Between 1 minute and 5 minutes, that's where I take my entries. I draw my trend lines. I prefer to take my entries on the 1 minute, especially when you're looking to enter off these corrections to catch the continuation. All right, so we're committed to our entry, and we're just waiting to see if we're going to get stopped out or if the price is going to go in our favor. Right now, it's just moving sideways. It's choppy. The odds are heavy, more heavy in the upside, up favor. Based on what we understand from the Elliott wave theory, the odds will be higher to the upside. But the market makers are always manipulating price, especially in its third wave, which is normally the wave that is supposed to end the correction, right? They normally manipulate the price then, either pushing it up or pushing it down. That's normally where the manipulation is. Either they're going to cut the wave short and bring the price the opposite direction, or they're going to extend the wave. When I say extend the wave, I mean if this is supposed to come, let's see, this is 1, 2, 3. This is supposed to be done here, right? At that level, this correction is supposed to be done. And then price pushed up. So this could be X, and then they start coming down by, and you see they came down here. This could be just a correction or more downside. So this could be WX, W, XY, this is X, this is Z. This Z wave could come like that as 3, or it could come as this 1 and start going up, or it can come down as 5 and then start going up like that, right? So that's a possibility. Or they can do something a little bit more dramatic, right? So this is where the wave is supposed to end, right here. It's supposed to end there. So this is W, X, Y, X, and this Z wave, instead of coming here and going back up, it could just simply do that. And come down here, right? So that's a possibility. This is just how the market makers move price. Many different variations, many different combinations. And they're moving the price in that manner to scare you, to confuse you, to make you make bad decisions so that you can place your stops in certain areas and jump out of trades in loss. That's their aim. Create liquidity. Make the market liquid. So right now I'm just going to wait, because what they're doing here is accumulating buyers and sellers. This sideways choppy type movement is an accumulation of price action. They're accumulating buyers and sellers in the market so that they can decide which side they're going to flush. Are we going to flush the sellers? Are we going to flush the buyers? So we'll see what's going to happen. The strength of the market is to the downside right now. Okay, they're building a corrective formation for another move up. This is what we're looking at right now. This entire thing, corrective formation for a move up, right? Is that going to happen? We don't know. The reason why we took the short is simply because we know that they broke the trend line. See this trend line? They broke the trend line. So look what's happening now. This wave is already starting to extend. So they accumulated buyers, and then they came, flushed them out. And those who put their stops down here, they're most likely going to come flush them out too. The odds of price still going back to the upside is still there. It is still possible that the price could want to go back to the upside because of the nature of this wave that's coming, right? So many different possibilities, and the market makers always keep these possibilities available, because if more sellers start coming in and they start to accumulate above this level and above this level and so on, and they are more than the buyers that are down here, they're just going to turn back. Right? That's what they do. Manipulate price and just look to create liquidity. So this level is still active to pull price back up there. But this one is also still active to pull price down here to liquidate all of the buyers in the market. Okay? So let's see how it goes, if it's going to continue coming to the downside. If the price does something that looks like like that, and then it breaks down. Ooh, that would be beautiful. I would move my stop into break even after it breaks down, move my stop into break even, and just maybe enter another position and wait for the price to get down to this level. On this account, I'm not entering another position, but on my other account, I'm going to enter another position. So we're just going to watch the price action now. Just watch, see how it unfolds. We have about 20 minutes left in this 1 hour time slot, right? So in the meantime, we're going to monitor this candle. We don't want this candle to close green. If this candle closes green, the odds are price could still push back to the upside. We're going to watch and see if this candle fades off and becomes a red bar. If it fades off and becomes a red bar, that would be a very nice sign. All right, as of the point where we are now, the price can still go back to the upside, guys. It can still go back to the upside. We are still in a corrective formation for another move up. We are just watching to see if the market makers are going to manipulate that move and keep pushing the price down. So right now, they're probably still trying to accumulate buyers in the market, pull more buyers in so that they could flush them out. Remember, guys, when the price is moving down, it's moving down because there are more buyers in the market. That's why the price is moving down. When the price is moving up, it's because there are more sellers in the market. Okay? All right, I want to see price continue pushing down some more. There's another thing that can happen, guys. We can simply just be in a bigger... See this? Come here, come back here, then maybe come down here. So all of that is possible. All of that is possible. So we need to be careful. We could be stuck in this accumulation for a little bit of time. So seeing price break down from this level would be a good sign. Want to see price come break down from this level. If it gets here, better yet. The further down it comes, the better it will be. Now, price looks like it left a little gap behind it. Now, that's not very nice. Looks like a gap. Could be wrong. I want to see price break down, come as far down as possible, which means the length of this wave becomes less likely to get to my stop before it comes back to the downside. Yeah. If this is a gap and they left that gap behind, that means it's possible they want to come back to that area, right? So they can come back, give us that one, this one, come back, go down. So that's a possibility. The fact that they left that gap behind, it says they want to return, if that's a gap. And on the 1 hour chart, we have that green bar now becoming a red bar, which is beautiful. We have about 15, 16 minutes left on this 1 hour bar. Let's see if it stays red. If price pulls back from this level to the upside, it could reach my stop. We don't know what game the market makers are playing. We're just doing our best to manage our trades to the best of our ability. I need to see price go sideways for a while so that I can decide. See, right now it hit the bottom. So this is where we're either going to be going sideways to go down, or we're going to be coming back to this level before we come down, right? So that's the two possibilities that exist right now. Well, at least that's the only two possibilities that I can see right now. Price action is dynamic. The market makers can do pretty much whatever they like. All right, giving us another impression that they want to go up. All right, guys, so pretty much exactly what I said would happen is what happened. The market makers, they manipulated that move, brought the price down. So whilst a lot of Elliott wave practitioners were looking for the buy and kept buying and buying in this wave here. So some of us, let's see, 1, 2, 3, we would have bought here as an Elliott wave practitioner, right? We would have bought here. Some of us may have bought here too, right? And then we would have been looking for buys here, especially when we see these green bars, right? Maybe even here. And definitely at this level, we would have been looking for buys. And there are still some of us looking for buys around this level, right? So this is why I use the Elliott wave theory as a forecasting tool. And since I have spent so many years using the Elliott wave theory, I start seeing the manipulation in it, right? It normally happens on the third wave. That's where the manipulation normally happens. And so I only use my trading system, I use the Elliott wave to just help me decide if price is accumulating and price breaks up. Okay, then I can go for that long to my next liquidity map zone. However, if the price does not do that, once it breaks the trend line to the upside, I look to go short to the next zone down here. So if I go short and it doesn't go, it just accumulates and accumulates. If it breaks out, I get stopped out and I look to go long to the next zone. So this way I can make up my losses and take profits here and look to maybe sell again if the opportunity presents itself. So right now we're getting another buy, right? We're getting another buy using the Elliott wave theory. So Elliott wave traders are coming into the market and they're looking to go long because they're still looking for this wave, right? They're still looking for that wave up. They're thinking this is going to be 1, 2, 3 down, and they're going to look for this wave to come like that, then to go back down like this, right? So some of them are looking to buy, but the market makers know that already. They know that. They know you're looking for that. So they're not necessarily going to give you that. That's like very obvious. Once in a while you will get it, right? But it's an obvious move. And because it's an obvious move that they set you up for, they're most likely not going to give it to you. They're going to start it. They're going to make you think you're going to get it. And if they realize that enough of you are not buying and more of you are selling, they're just going to evolve this, right? Push it up a little bit more. And then if everyone starts to buy at that time, then they bring it down. If not, then they just keep evolving it. They will just keep bring it like this, push it up. And if everyone's not buying yet, they'll just bring it like this, push it up. And if everyone starts buying at that time, they just bring it back down, right? So we'll see what's going to play out. So I'm short, I'm looking at my D zone, okay? So I'm looking to get to my D zone. Once I get to my D zone, I'm going to be happy. Okay, and it looks like we may get to that D zone before 2 p.m. Eastern Standard. So if we get to that D zone before 2 p.m. Eastern Standard, I'm going to look for a move back to the upside to my next A zone. But I'm going to have to create a trend, right? So I'm going to have to trend that move and look for that reversal to the upside. Let me try to see if I can prepare for what that potential move could look like. So that's the main trend to the downside. This is a minor trend to the downside. And this is more of a minor trend to the downside, a lower degree trend to the downside. I don't need that one. I'll just use this one, right? We could get an early entry if price hits the zone and breaks whatever trend is created here, but normally could come here, come back, then go. So I'm just going to watch, just monitor, right? So this is what I'm looking at. This yellow line here is another gap that was left behind in the market. So price could be coming back trying to fill that gap. Most likely we will fill that gap today. We filled one, I believe, yesterday or this morning. I think we filled a gap. I can't remember where it was. I think it was maybe this level somewhere here. We filled that gap. And then I removed that yellow line, and then we have this one down here. So once we fill this one, I'll remove that line as well, and we'll have this one left. right? Now, I knew the price was going to come back to that level, and I knew the price was going to come back to this yellow line down here at 33,346.99. I knew the price was going to come back there, but it took a very long time before it started coming back in that direction. So, guys, remember, hit the subscribe button, hit the notification bell, hit that like button, subscribe to the channel, hit the notification bell, so this way you can get notified whenever we post another live stream. Guys, once you stay with me, I can promise you that you will learn a lot. Okay? You will learn a lot. The method that I'm using is completely different from anything that you've ever seen. It does have a little bit of Elliott wave theory in it, and I do use trend lines. Okay? So I use trend lines, I use the corrective formations in the Elliott wave theory to help me understand what the price wants to do, along with the trend lines will help me to predict what the price wants to do so that I can take action. Okay, so let me give you guys an example of what I did. We have Pratt with us today. Welcome back, Pratt. Pratt says, I'm here to learn. Welcome. I'm happy that you're here to learn, Pratt. So Pratt, we're in another trade to the downside. Price is coming down. We're looking for that D zone. Okay, I'm not sure if you were with me. Was it yesterday? I think you were with me someday. We were having a lot of live stream issues. Today is what? Today is Tuesday or when? I don't know what day today is. Let me check. I'm checking to see what. Okay, today is Wednesday. Okay, wow. You see, when you're a trader, it's so hard to keep track of time. So today is Wednesday, and I think it was maybe Monday or Tuesday. I think you're with me. I was having some live stream data issues, and our stream went for 3 hours. However, we only got 1 hour recorded. So that's sad. It was a lovely stream. I enjoyed it a lot. So today it's a similar situation. We're in a sell again. It probably looks identical to what was happening the last time we had our live stream. And we're just waiting for price to get down to that D zone, right? So why did we get into this trade? We got into this trade because this trend to the upside broke. And this is a corrective move to the upside. So the price is coming down. We have a pullback, which is a corrective move. So I trended that corrective move. It broke down. I took my entry somewhere right around here. So this looked like this, right? So that's how it was. Broke down, took my entry, price pulled back, pushed up, pulled back, pushed down, and then broke out to the downside. Okay, so I even went into the manipulation that happens in the market using the Elliott wave theory and so on and so on. But you can always listen to the live stream again from the beginning and you'll get all that information. That's why I record it. And I'm trying to record my journey so you guys can see for yourself how good my method is and how good my EA is as well. So I do have an automated trading software. It is wonderful. It is very powerful. Yes, it does have some drawdown periods. It's not perfect. It follows price action. Price action is not perfect. So on the days when the price is choppy, it's going to be taking on some losses. But on those days when the price moves aggressive in one direction, you're going to be making an immense amount of profit. You can make up the profit, the losses that you sustain within, let's say in a 1 month period. You can make that up sometimes in 1 or 2 trades, right? So you can imagine how profitable it is. And right now we're in that period of time when the market is not moving aggressive between 8:30 and 9 and 9:30 and 10. You guys should understand that 8:30 is when most of the Forex news comes out, right? So at that time, we could see some high volatility, some big moves with momentum. At 9:30, that's the stock market open. That's the equity market open. So at that time, you will see aggressive moves in the market. Okay. So that's the time that the EA trades, and we come in and trade manually from around 10 o'clock, right? That way, most of that aggressive, volatile type move is already done. So this way we can enter our trades without the price running away from us too fast and stuff like that. Okay. Doesn't by any means mean that you can't trade the system from 8:30. You can, okay, but it is better. It's easier to manage after 10 o'clock. The market settles at that time, and then you can now start using the system. Pratt says, I got winning trade on Euro USD today. Okay, how did you come up with that winning trade on Euro USD today, Pratt? Remember, guys, hit that subscribe button, hit that notification bell, and hit the like button, guys. Help out the YouTube algorithm, help the video to be displayed to more people. Remember, the live stream is new. We're very new to the live streaming background, I should say. We're very new. So over time, things will get better, things will get more exciting, and so on. All right, so we're just waiting for price to come down. We have this gap in the market. I drew this line to represent where the gap will close. And we have this new gap down here as well. So let's see if the price comes down into that area. I'm going to try to pull this down a little bit, right? Closer to the gap, just to see if we can grab a few extra dollars. Hopefully that gap closes today. If that gap closes today, we'll be able to catch the few extra bucks on it. Pratt says Asia session, liquidity sweep, and entered on fair value gap. Okay, so Pratt, you're probably wondering to yourself, how does he know that? I am familiar with ICT and what he does. I am. And it is practical. I'll not deny that what he teaches is not practical. It is practical, right? What I teach, what I do here is, in my opinion, it's better. It's more accurate. It's something that you can plan out into the future before it happens, right? So, and it's when you can't trade using ICT, I can trade, right? So I have way more opportunities in the market than an ICT trader, right? So no, not knocking on ICT at all, guys. Just don't think that. I'm just saying that there are different types of methods and there are different approaches to the market. And a lot of these approaches may work, may be good, but some are just a little bit more deep than others, right? So ICT's way of trading, I admire what he was able to figure out in the market. And I give him his props for that. Round of applause for him. Well done. But I can do better. So we filled that gap. So this is no longer valid. No need to have that anymore. And one gap filled, we have one left. So let's see how price comes down here. So, well, Pratt, you're an ICT trader. You're not in a trade right now, are you? Right? And I'm in a trade right now. Okay, so it's just a matter of perspective, right? You need to understand the method you're using and what part of the market it best applies to. Simple. What part of the market your method best applies to. I mean, you can't come into the market, look at my entry and say that's not where the price is going to go when you're looking at the price from a swing trader's perspective, right? So if you're looking at the price from a swing trader's perspective, you could be seeing the price going to the upside. But I'm looking at the price from a day trader perspective, and I'm going to see the price going down, right? So it doesn't mean you're wrong. It doesn't mean that I'm right. It just means that we're looking at it from two different perspectives. And the more accurate your method is, the more powerful your trading will become, right? So understand as much about the trading world as you can. Just understand as much as you can about the trading world, because knowledge is power, right? And our aim is to have as much power as possible, okay? So sometimes you may approach your chart, and a lot of different methods that you learn, they come and they start clashing against each other and they create confusion. But you have to, and I've been going through that journey, right? Because I know way too much about the financial markets. Way too many methods I've studied, right? So it comes back to haunt you in some cases. It really comes back to haunt you. So that's why it's always said to have a mentor, right? So I'm also a mentor. I work for other companies as well. I teach their methods. I teach my methods for different companies. It all depends on the company which I'm working for, right? The current company that I do some work for, I teach their methods. I don't teach my methods, but I do incorporate some of what I do to help the students understand why the price moves the way it moves and why it's doing what it's doing, right? But it is very good to understand as much as you can about trading, but you will reach a point where you're going to have to start shaving off some of what you learned, because not all of what you learned is going to be applicable to the market. Some of it's going to be just trash, and some of it's going to be very valuable. So you're going to have to sort it out. Sort out the trash from the valuables. Okay? So, Elliott wave theory, oh, that was a big one for me. I love the Elliott wave theory. And I still love the Elliott wave theory, because for me, it is the foundation of price action, but it's the foundation of retail price action. And that's what a lot of us don't understand. But before, I used to think that the Elliott wave theory was the foundation of all price action, but it's not. It's the foundation of retail price action. Now, it is something that the market makers use. They use the Elliott wave theory, the concepts in it. They allow us to have whatever information that we have now from a retail perspective. They allowed us to have it, right? They allowed us to have it. They allowed us to use it so that they will know exactly what we're going to do. It's like programming us psychologically to do a certain thing a certain way at a certain point, right? So that they just seamlessly just come, sweep the liquidity, take your money, and that's it. You're the loser. The market maker is the winner. That's why it's said that 99, 98, 95, whichever the stats are, that amount of traders fail. So we're looking at maybe a 2% to maybe 5% of traders who succeed, right? You don't see everyone successful as a trader. It's just a small amount of traders that are successful, and these are the ones that stick to their methods, and they really filter out what trades they're going to get into. They really go for those high probability setups, right? And then we have those who basically just follow whatever method they learned, and you're just entering trades left, right, and center, not understanding the real reason for price moving the way it's moving, right? So I did say that I would have been moving my stops to break even when price created a bigger corrective formation, and I think this might be that bigger corrective formation. So I'm going to move my stops into break even. Okay. So my trade for today is risk free, right? And I can decide to just take my profits now if I'd like. I've made $100 off of 180. So that's like 50% growth on my account so far, right? So I could choose to just bank that trade and walk away, right? But I'm going to allow it to play out, because I'm thinking if I see any reason to close out this trade because it may be building a bigger corrective formation, then I'll jump out. But for now, all I can see is price doing this, potentially coming here, then hitting this level, and then maybe starting to reverse, right? That's potentially what I'm seeing. So I'm going to try to see if I'm going to allow it to play out. All right, so Pratt says 1 trade a day is enough for me. That's good. You don't need to have 3, 4, 5, 6, 7, 8 trades for the day, right? You don't need that. 1 good trade, that means that you're a day trader, Pratt. So one good day trade, and that's all you need. Just one good day trade. Use a method that is very, very powerful. Use the most powerful method that you can find. Practice the method. Use it over a period of time. Try to get to know it like the back of your hand. And one trade a day is enough. The trades that I'm taking, they're so accurate that I can double my account on it, on that one trade that I take on a daily basis. If I get stopped out, because of how I place my stops are generally very small. Sometimes it may frustrate me a bit because my stops are very tight, right? So I could risk my entire account on a trade. And when I place my stop reduces that risk to maybe 10%, right? Like where I had my stop today, I think it was about $28 or something like that. So almost $30, right? So that would have been about 15% risk on my account. Did I get stopped out? No, I didn't. But price did, come back close to my stop because my stop was just above this high, right? And price did come back, trying to tickle my stop to stop me out and then drop. But it didn't happen because I placed my stop the right place. So stop placement is also very, very important, right? So because I had my stop placed the right area, and because I had enough guts to not jump out of the trade and confuse myself, I was able to catch the move to the downside. And that's also because I understand that this sideways move here, which according to the Elliott wave theory should be going to the upside, could be a manipulated move, right? I did bring in my Fibonacci. So I drew my Fibonacci. So this is the 1 hour bar. I drew my Fibonacci off this bar, and I know that price generally is going to retrace 50% to 61% of the bar on the 1 hour time frame, right? So this was that retracement that was happening there. So this zone represents 50% to 61.8%. So when the price comes here, I'm not going to enter the trade just because it got to 61.8% or 50%. No, I'm not. I'm going to wait for price to break the trend. So when the price is going up and it comes back and breaks the trend line, closes outside, then I'm going to say, okay, it's possibly ready to go down. So this is the first sign that price wants to go down. One of two things is going to happen. It's either going to go sideways and then break out to the upside, or it's going to continue moving down. It could also go sideways like you see here and then break down. And this is going to be a manipulated move, right? So I was able to hold on to the trade, catch the move to the downside, and now I'm in nice profits. Right now, over 50% return on the account. So let's see. I'm trying to trade this $100 account. Well, it started off with $500, right? I did start off with a rough start where I kept getting stopped out because of moves like this. Because when I entered and I put my stop here, I kept trying to move my stop into break even. So first break even got taken out, then my stop ended up inside of the range. So then it kept getting stopped out and stopped out and stopped out and stopped out, and then the price went in my favor, right? So because of situations like that, with me coming in hard and getting stopped out because my stop ended up in the range, that's what caused the drawdown on the account. So what I started doing was just leaving the stop where it was. Leave the stop where it was. Let the price come down. Let the price make a bigger correction, then move the stop into break even. And that's a much safer way, right? And it's been working out nicely. Don't move your stop too early. Understand when to move your stop, because the market makers, they know what you're going to do. They know that you're going to try to move your stop into break even. They know that you're going to get afraid if they pull the price back against you like this. They know that if they do this and your stop is here, a lot of you are going to just close the trade, right? You're going to close the trade and then you're going to try to go long. And they just bring the price back to the downside, right? And your stops are going to be below here and they're just going to come down here. When you see price approaching that stop, you're going to get scared. You're going to close out that buy. You're going to start going short. You're going to sell. Then they just bring the price back up. Your stop is below here. And that's how they create accumulation. They accumulate buyers and sellers in the market and then they flush you out. right? They grab liquidity. So this is one of those things ICT traders who trade liquidity grabs and so on would be looking at this and saying, okay, they're going to come down here, grab liquidity, and they're going to push back up here. They came down, they grabbed liquidity. Did they push back to the upside? No, that didn't happen. Okay, so you got to understand why price action is moving the way it's moving and where it's possibly heading based on where it came from, right? And my liquidity map zones, they tell great stories of where price wants to go. So guys, hit that subscribe button, hit that notification bell. Thank you for hitting that like button. I appreciate the love that I'm getting. I know right now the channel is small. I've had this channel for a few years, but I've hardly ever used it, right? So now I'm trying to spread the word and I'm trying to document my journey live for you guys to see how price really works, how it really moves, and how powerful my methods really are. So feel free, ask any question that you want. I do have a lot of knowledge when it comes to different methodologies in the market. If I don't know, I'll say I don't know. It doesn't make sense to try to pretend to know something that you don't. I won't say I understand ICT's methods in its entirety. I don't think I do. I did not create the method, so I can't. Just like his students can't understand his methods in its entirety. We all still have a long way to go. Still have more to learn about the financial markets. So guys, Pratt, shoot me some questions. Who else is with me today? I see there is someone else with me, but I'm not sure who else it is. Identify yourself. Price is coming down nicely. Looking for this target zone here inside of my D zone. This D zone is telling me this is the end of where that price is expected to go. So price is expected to get into this area and reverse. It could reverse a little bit early from the area. It happens sometimes, right? It happens. Let me just try to see if this trend could be refined. Just refine it a little bit. All right. So it could keep with this trend to the downside. It could break it and then come back to the downside. So that's a possibility because we have pulse. So this is most likely going to be correction. If this comes and breaks this high, then it could be deeper correction. Let's see if it continues respecting this trend to the downside. Hit that like button, guys. Hit that subscribe button. Hit that notification bell. For those of you who are just coming in, you can always play this live stream from the beginning. I'm sure that you will find a lot of value in it. Hit me with your questions, any questions on any topic related to trading. It's not a problem. I was just having a conversation with Pratt about fair value gaps and liquidity sweeps and the Elliott wave theory and a whole lot of different things. But what you're looking at right now on your screen is the liquidity map. It's the Phillips liquidity map. Yes, I named it after myself because my name is Leroy Phillips and I need my name to live on, right? So I've put in some serious work into the markets. I've been here for over 10 years in the market. So I have made a lot of discoveries of my own. I have designed a lot of trading methods of my own. I did also design a automated trading robot, which you can also see on my channel. I do stream that from 8:30 to 9 and from 9:30 to 10. I created the liquidity map. I also created over 100 harmonic pattern formations. I don't really use the harmonic patterns and try to teach that because my discoveries have evolved over time that harmonic patterns kind of became kind of obsolete, right? A method that is a bit more complex and not necessarily as complete as I would like it to be. So I could bring in harmonic patterns and I could lay it over the Phillips liquidity map, and it could also help me to identify the areas where corrections will form. Or when I say corrections, I mean accumulative zones like this. I can see where they're going to form using harmonic patterns. The harmonic pattern, however, gives you a projection for where the price is going to go. So if this was a harmonic pattern here, let's say it came in here like that, and it would create this zone like this accumulative phase, right? So generally profit targets on this harmonic pattern would be right here at this peak. You take profit here, first target, second target somewhere down here, third target somewhere down here, right? And for those who really understand how the harmonic patterns work and how big that wave can actually be, you would be targeting maybe somewhere lower down here, 1.618 or something like that, right? 2.618 or whatever the Fibonacci measurements give, right? And that's basically how harmonic patterns work. But you'll be taking those trades and kind of like hoping that you get to your profit targets. So at TP1, you bank, TP2, you bank, TP3, you're banking. But what if price doesn't get to TP2? It only gets to TP1. So that means the other two trades are going to end up getting stopped out, or maybe you take a break even on them, right? But with the liquidity map, we can trade from zone to zone. So if whatever method we implement, we can know where the price is expected to go. So this zone was hit already. Price is going to the next one. This zone was hit already. Look at this. Let me just try to show you guys this. So this was A, right? Let's go 5 minutes. So look where price came from. It came from this B zone, liquidity map B, zone B, and it started to come down, right? So it pushed off that B zone, and this is the area where we do not trade manually. We don't get into trades manually around this area because it could be very aggressive. It could be very sporadic. So we wait for 10 a.m. Eastern Standard to get into trades, right? It could move very fast. It could just spike down, bounce, hit this A zone, spike back up, hit the A zone, spike back down, spike back up. It could do a lot of that stuff because volatility is generally high in that area, right? So we wait, let it cool down. So from 10 o'clock, we start looking for our entries. So look at what price did. Come down to the A zone, bounce off the A zone, give us a corrective formation, right? So when we see this corrective formation form, we know, okay, we're going down to the B zone next. Price, we can take the break of the corrective formation. Price comes down, hits the B zone. You bank your profits. It creates a pullback, right? This pullback, if you understand price action, you're going to know that this one up and this one are connected. So this is one corrective formation. So that means that price is most likely going to start going back to the downside. You pull your trend line. When the price breaks that trend, you take the short to the next zone, C zone. Gets to the C zone, bank your profits. We know around the C zone, we're going to expect that we're going to get another correction. You get another correction here, you trend it, it breaks down, you sell it to the next zone, which is the D zone. When price gets to the D zone, and normally, guys, the D zone is generally where you get the longest move, right? You can see that long, nice long move. So it comes down, gets to D zone, you bank your profits here. Why? Because when price gets to the D zone, it's most likely going to bounce back up to an A zone. So I'll have to adjust my zones, and there's going to be an A zone maybe somewhere around this level. So price comes here, bounces here, hits the A zone, and it may continue going back to the downside for another A, B, C, D move to the downside. Okay, so it's easy, and that's what I want to do. I want to create methods that are easy, that I can give to my children. Okay, when my son turns, well, I have 3 sons, and when they turn 18, I want to be able to say, here, son, come, let me teach you how to do this. Or when they turn 25 even, because I don't want my children to not take their education seriously. Trading will always be around. I would prefer that my kids take their education seriously get a good education, become a doctor, become a lawyer, become whatever you want to be. But I'm going to give you a business that you can have with whatever your passion was. If your passion is to be a doctor or a lawyer or a politician or whatever it is, you can be that, and you can also be a trader. So whatever monies you make from whatever your profession is, you can now take that money, and instead of putting it on the bank, you can put it in your brokerage account, and you can put your money to work for you, right? Or you can decide that you don't want to be a doctor, you don't want to be a lawyer, but you're smart enough, you have enough education, your brain is developed enough to approach the market, right? Not all of us who didn't reach a high level of education have enough brain power to approach the financial markets. Some of us are fortunate to have enough brain power to approach the financial markets and figure it out, or at least find an edge, right? So I'll always say, get a good education, because a good education puts you at an advantage, not just socially or financially by giving you the ability to have a good job or whatever. It gives you the advantage intellectually, right? And being a trader, you need to have a very high intellectual capacity, right? So don't just listen to everyone who talks and says, you don't need to go to school. I quit school to do trading, and that's a lot of nonsense, right? Trading will always be around. Get a good education, because it's going to be the foundation for you. It's going to be the foundation for your ability, your intellectual ability, your ability to understand the market, and your ability to apply different concepts to the market. Because you could be the next big, how can I say, the next big discoverer, right? You could be the next person to discover an edge in the market, something that I did not see, or Scott Carney did not see, or Ralph Nelson Elliott did not see, right? So for you to be able to do that, what were these guys? They were mathematicians, they were scientists, they were accountants, very intellectual people, very smart, right? We have Pratt saying, teach me too, like your children. I would love to teach you. It's not a problem. However, I'm not open to having courses yet. Maybe in the near future, right? Right now I'm just building the channel, letting you guys see what I have. Come to the live stream every day, because every day it's a learning experience. Ask any question you want. I will give you the answer to it, except how I create my liquidity map. Okay, so I won't be telling anyone how to create the liquidity map. It's intellectual property. It did take me many, many, many years to do this, right? It looks very simple. It is very simple, but it's not simple to find, to come up with, right? And if I give away my intellectual property, then it's of no value to me anymore, right? So this is going to be turned into an indicator, and I'll make that indicator available to the public, right? So you guys can come, have the indicator, pay your subscription, and use it along with me even on the live streams. Okay, so that's the plan. So I'll be handing my life's work over to my children at some point as a business, and a business that they can use the tools to generate income without having any customers, right? So we don't need to have students. We don't need to have customers. We don't need clients. We can simply just make some money from whatever your job is, invest a little bit, and grow that money over time. So this account originally started off with $500. And as I told you guys how I ended up bleeding out most of the profits, because I kept getting stopped out, because I kept moving my stops to break even earlier than necessary, right? However, look at how fast I'm making up the losses. This account went all the way down to $70 something. And look at how fast I'm making up the losses by just simply not moving my stop too early, right? That's all that I had to fix. The liquidity zones, perfect. The entering off the trend break, perfect. However, moving the stop to break even, that was where the issue was. Moving the stops too soon, kept getting stopped out. And whenever that happens to you guys, it can create confusion in your mind, because you're going to start second guessing yourself, and you're going to start second guessing your method. And the market makers know that. That's why they move price the way they move price, so that you can psychologically become impaired, right? You start making bad decisions. You start panicking. You start getting frustrated. You start doing crazy things in the market. Whereas you're just supposed to sit back and relax, right? Sit back, relax, set your targets, sit back, relax, wait for price to get to your target. Okay, so right now we are breaking out from this trend line that I showed you, and you can see, let me just make it a little bigger. You can see why this trend line has value. So it's breaking out from it and it's pulling back aggressively. So price could have already reached the area where it wants to pull back. Now it could just make a bigger correction and then come back to the downside. Do I want to wait for price to make a bigger correction before it comes back to the downside? Not really. Not really. Look at the 1 hour time frame. Look at how this bar is behaving, right? If this bar becomes a green bar and closes as a green bar, there's a possibility that we can have a bigger correction, right? I don't want to find myself in a situation where we end up with a bigger correction and I end up getting stopped out, right? Because as you can see where I'm entering, I'm just entering from the correction off the C zone. Price can correct all the way into this area before it comes back down. And I don't want to be caught up in that. Okay, so I'm just going to monitor closely. Let's see if this trend line is going to hold the price and bring the price back to the downside. Let's go to the 1 minute time frame and we're going to watch. We're going to watch the price action on the 1 minute time frame. And that move was a little aggressive, but I'm thinking this is the trend. I don't want to bring it up too tight. I want to give it a little bit of breathing room, right? So I'm thinking this is the trend, the corrective formation on the 1 minute time frame that we're getting right now. So this could, right now, let me see here, pencil. So we have 1, 2, 3. This is 4. We can get 5 here and then possibly start coming back to the downside like that. Maybe make one more up, then come down, right? So that's a possibility. And this is all according to the Elliott wave theory. Okay, all according to the Elliott wave theory. But we will see how the price evolves. We will see what the price wants to do. Let's see how it's going to unfold. If it dances around too much, I can just simply just close out my trade and walk away with the profit that I already have. Yesterday it did the same thing. It came very close to our zone yesterday. Very, very close. And it just did not come into the zone right away. I think it came back to the zone later on. But we didn't get into that zone yesterday. It just came very close. Okay. I'm just going to wait a little bit longer. Just going to allow, maybe let it bounce off this trend line. Let's see if this trend line is going to push the price back down. If it breaks this trend line, no. That means possibly bigger correction. I don't want to be in the price when it's making a bigger correction. We're approaching 2 p.m. Eastern Standard soon, and at that time the price could reverse, start moving to the upside. So we came that close to that zone, so it could be making a correction for another drop, or it could be reversing, right? It's very close to the zone. Very, very close. So right now I'm just waiting a little bit. I'm just trying to exercise patience, guys. Trying to exercise patience because I have my trend line drawn. And if the price is going to respect that trend line, we should be coming back to the downside. Yes, in some cases you could see price hit that trend line, break it, and still come back inside the trend line and go down. It can happen like that sometimes. Okay. Overall, we're at no risk on our trade. So we don't have anything to lose. Okay. So it's pushing up aggressively. Let's see how it's going to react here at this trend line. So this is the point where a lot of traders start to get nervous. Even myself, it will start to affect me psychologically. But I need to manage my trade. So you put certain things in place so that you can kind of see what's happening, right? So this is a trend to the upside because it broke that high. So this is the short-term trend up. We're coming back. We're breaking down, right? So because we're coming back and breaking down, this could already be a rejection of that trend line, okay? So it could already be a rejection of that trend line. We didn't quite touch it, but you know, it's not perfect. So this could be a rejection of that trend line already, and price starts to come back to the downside. So as price starts to come back to the downside, when it breaks this trend line, then that will give me more confidence that price could reach to this level. Okay. So let's see if this is just our correction for more downside. And on the 1 hour time frame, what are you seeing? All you're seeing is a wick, right? All you're seeing is a wick. On the 1 minute time frame, that's where you get to see the detailed price action. Let's see how the price is going to go. Just give it some time. Coming down nicely. This is why you need to have things in place, like the trend lines and understanding corrective formations. So price is coming down. Let's see if it's going to hit this trend line and bounce to the upside, or if it's going to break down. You see, we're getting a little bit of respect at that trend line because other traders can see it and they're looking to try to buy at that level. Market makers are going to allow them to try to buy at that level because they know this is accumulation and they want to push the price down. So we're going to let them buy, put their stops below this level, and then they're going to eventually just bring it down, stop them out, grab more liquidity, push the price down to this level. All those who sold, start pushing the price back up, take them out. Okay, and just repeat the cycle again. A, B, C, D, A, B, C, D, A, B, C, D. And that's how they go. Sometimes they go A, B, A, B, A, B, A, B, A, B, C, A, B. They're just creating accumulation. That is why you need to bank your profits at your zones. Whenever price gets to your zone or gets close to it, that's where you want to bank your profits. Okay? I'm trying to get into the zone because this gap is attractive and I've been watching this gap for a long time. So I'm trying to see if price gets into this gap. I could have taken my profit somewhere here and just be done with it. I know when price is creating these small bars, it's just liquidity is drying up. Not liquidity, but volatility is drying up at this time and price could break down, right? But they always try to manipulate the price. So what's happening here is a manipulation. So they manipulated the price back to the upside. And so I'm going to expect them to bring it back down. Okay. If they don't bring it back down, then they could be acknowledging that price may have reached that area where they want to reverse. And if that is the case, no problem. If price breaks out of this trend, I'm going to close my trade. I'm not going to give back all my profits just because I want to commit to this zone down here. I'm using my trend lines, and the trend lines also tell me a story. So the trend line is telling me that if the price breaks out, it could be making a bigger correction or it could be reversing. And I don't want a bigger correction and I don't want a reversal. I want to bank my profits. Okay? So I'll bank what I can. That is part of trade management. So right now we're going a little bit flat, right? So because we're going a little bit flat, I'm going to expect price to break down. Okay? Right? Flat, it's creating what a lot of us like to call a flag. Pretty much kind of like what was happening at this level, right? It was creating a flag for more downside, right? But they manipulated the price by bringing it back to the upside. They can do that here too. So you need to be aware of things like that. They can make it go flat, make you think it want to come down, and then manipulate the price back to the upside, then bring it back down. That's just how market makers work. They do that just to grab liquidity and create liquidity in the market as well. Okay, so they're tricky. All right, so we're at that area where we need to decide what's going to happen next. So a lot of volume in that candle. It looks like they left a gap behind, left a gap here. So there's a possibility they want to pull back. So when you understand gaps in the market as well, it helps you to see the manipulation that comes with price action at times, right? So broke out, left that gap, and they may want to come back to fill that gap. With them coming back to fill that gap, they could engulf this candle and start that move to the downside. So that's a possibility. So let me see if they're going to come back to fill this gap. Okay. That gap left a hint. It left me a hint that the price wants to come back. Right? So that's a gap. This yellow line also represents a gap in the market. Will they fill the gap now, or will they go up and then come back later to fill the gap? That's the question. I'm trying to bank on them coming back to fill that gap now. We're at the trend line. And when you're at the trend line, you can see price break out, come back inside that trend line. Sometimes it could be as a result of you not drawing the trend line very accurately. Sometimes it could be as a result of manipulation, trying to get you to buy, and then they bring the price down just to create liquidity and grab that liquidity. On the 1 hour time frame, we have this bar becoming what looks more like a hammer. So let's see if this bar is going to end up as a green bar or if it's going to come back and become a red bar, right? Who's with me right now? Is it Pratt? Welcome, welcome. Don't forget to hit that subscribe button, guys. Hit that notification bell. Hit that like button. All right, so we're breaking out to the upside. Let's see if this one is going to be sustainable. I really don't think this one wants to go to the upside, though it can because we came this close to this zone, so it can. We're giving back quite a lot of our profits right now. We have like 15 minutes left on this 1 hour bar. Is it going to continue moving up? Is it going to go down? My position is secure. This is becoming a bigger correction. It's not looking very nice. Let's see here if I can try to manage this. All right, this is the trend to the upside. I need them to break down. If they come break down from this one, we could go back to the downside. But if they continue up here, it's just going to continue growing and growing and growing, becoming a bigger corrective formation. Right now, the bar is green, right? Another thing that we need to understand when it comes to price action, you see this body of this bar, price likes to come back into the body of the bar before it goes down. You see this one? Price came back into the body before it went down. Here, price went back into the body before it went down, right? So this could just be market makers pushing price back into the body of the bar before pushing the price back to the downside. So we're going to just try to watch and see how it's going to unfold. 1 second. All right, guys, I'm going to call the live stream to an end right now. I'm going to take my profits. I'm going to walk away, come back tomorrow. I have someone who just came to pay me a visit. So I'll see you guys tomorrow. Thank you so much for coming. It was indeed a pleasure. Bye-bye for now. I'm closing out. Bye-bye, guys.